Assalamualaikum. My name is Muhammad Irfan Afsham bin Latif, matrix number 303-291.
Assalamualaikum, my name is Siti Raiham T. Aisalim, matrix number 303381.
My name is Tan Xiang Tai and my metric number is 304106.
My name is Nubakis binti Abdul Basir. My matric number is 304331.
Hello, my name is Kamil Duraikana. My matrix number is 30434.
So, hi everyone. So we work on preparing the statement of profit or loss, the statement changes in owner's equity, and the statement of financial positions. Let's start with the statement of profit or loss. What do you think was the most important thing we needed to focus on for that, Ms. Rahan?
For the profit or loss statement, we have to make sure we accurately calculated the net sales by adjusting for sales return and discount. So we also had to deduct the cost of merchandise sold and operating expenses. So I think it was important to keep track of all the expenses like advertising and salaries to get it to the real picture of Masmara's profitability. So what about you? Did you find any of the part tricky?
Yeah, the adjustment for sales returns and discounts were a little bit tricky at first, but once we worked through the number, it makes sense.
Yeah, that's right.
Okay, so I have one question from both of you. What is the importance of adjusting for sales returns and discounts in the net sales calculation?
Oh, the important for it is adjusting for sales and returns and discounts ensure that net sales figure accurately reflects the true revenue. So after accounting for any returns or discount, provide to customer. So that's it for that.
I also have a question. So, what is the relationship between the cost of merchandise sold and net income in the profit or loss statement?
The cost of merchandise sold is subtract from net sales to determine the gross profit, which is then adjusted for operating expenses to calculate the net income.
I want to ask, how do sales returns and discount impact the overall financial health of a company?
It impacts like the sales return and discounts reduce the net revenue, so that which affects the overall profitability. So the proper adjustment are crucial to understanding the actual finance performance of this business. Yeah, that's my answer. So
Okay, then we moving on to the statement of changes in owner equity. We had to consider things like the capital at the beginning, any withdrawals by the owner, and of course, the net income from the profit or loss statement. That was straightforward, but it was important to make sure we reflect those changes accurately.
Right, I have a question, Stan. So,
Yes.
why is it important to reflect changes in the owner's equity accurately?
It's important to reflect changes accurately to provide a true representations of the owner's equity and the overall financial positions of the company.
And how does net income from the profit or loss statement affect the statement of changes in owner's equity?
For your answer, Bakis, net income, it increases the own equity. So it will contributing to the overall changes in equity of the statements. Yeah.
Well, I have a question for Mr. Tan. So what role do owner withdrawals play in the statement of changes in owner's equity?
Owner's withdrawals reduce the owner's equity, and this need to be accurately recorded in the statement to reflect the change in ownership balance.
Exactly.
Thank you.
So I would like to ask a question for you all. So what is the significance of capital at the beginning of the period in the statement of changes in owner equity? Anyone?
So I think the capital at the beginning of the period serve as a starting point for calculating the changes in equity, including adjustments for net income and withdrawals by the owner.
Exactly. So, right, and for the statement of financial position, we had to list all the assets, liabilities, and equities as of the end of the reporting period. So it was essential to make sure the total asset matched the total liabilities and equity. So it will be all like relating. We need to match it accurately. So, Mr. Tan, what do you think the most challenging part was?
I think balancing everything was the hardest part. We have to make sure all current and non-current assets were listed correctly, and then we have to add up liabilities and equity to match the total assets. But in the end, it all came together once we link everything properly across the statement.
Exactly.
How do current liabilities differ from non-current liabilities in the statement of financial position?
Oh, it differs like current liabilities are obligations that are due within 1 year, while non-current liabilities are long-term debts or obligations that are due after 1 year, not only 1 year.
Mm. Well, then, what is the purpose of the statement of financial position in financial reporting?
The statement of financial positions provides a snapshot of the company financial health at the specific point in time, showing the assets, liabilities, and equities that are.
All right. So my question is, what could happen if the total assets do not match the total liabilities and equity?
Okay, for your answer, Sham, if the total asset do not match the total liability and equity, it indicates a mistake or discrepancy in the financial records. It means you have made a mistake there, which could suggest errors in accounting or misclassification of items violating the accounting equation. So next
So,
question.
yes, I have a question for you all. Why is it important to correctly classify assets as either current or non-current? So anyone got the answers?
I think current classification helps provide uh, clarity on the company's liquidity and its ability to meet short-term and long-term obligations, which is crucial for investors and creditors to assess financial risk.
So that's it. So after we did the part one, the key takeaway for me is how all the statements are interconnected. So if you see at part one, we have like 3 statements and each of it are connected. So once we get to the net income from the profit or loss, it affected the owner equity and then it fed into the balance sheet. So it was great seeing how the numbers of each statement are supported the others. If we did mistake or wrong one in either one, it will affect the overall.
Yes, exactly. And I think this project helped us see how important accurate financial reporting is for business decisions like securing funding or managing operation effectively. Plus, it really gave us a better understanding of Masmera financial health.
Exactly, Mr. Tan. So anyway, we have learned about a lot about how financial statement reflects a company's performance, and it has also helped us practice using accounting to prepare the statements.
Definitely. And it will be useful for Masmera to improve its operations and make better financial decisions moving forward.
Thank you, Mr. Tan.
Thank you for
Yes.
the part A. All right. After completing the financial statement in part A, we realized that some of the information was mistakenly omitted, so it is requiring adjusting entries. So let us all go through the impact of these omissions on Masmara Enterprise Accounting Equation, particularly focusing on 4 aspects, which is net income, assets, expenses, and liabilities.
For example, we missed depreciation of office equipment and delivery vans for 35,000 ringgit. This will result in a decrease in assets, office equipment delivery van, and increase in expenses, depreciation expense, which will reduce net income.
Well, if assets and liabilities are misstated, how does that impact the overall financial health of the company?
Great question, Tamil. So, if assets and liabilities are misstated, it can lead to incorrect financial ratios, such as liquidity and solvency ratios, which are crucial for stakeholders to assess the company's ability to meet its obligations and invest in growth.
Thank you.
Okay, so I have a question. How do we ensure that adjustments like depreciations are accurately reflected in the future?
To ensure accuracy, we need to have a clear depreciation policy in place and conduct regular reviews of all assets to ensure depreciation is calculated consistently and appropriately.
So I have a question for Sham. So what steps can be taken to prevent issues like unpaid salaries or missed invoices from not happening again?
So, for your questions, Raihan, we need to improve the internal controls. For example, we could implement regular payroll audits, and ensure the billing department has a checklist to track all the invoices before sending them. This way, nothing get missed.
Okay, well, I have a question for Balkis. So, how do adjustment for unearned revenue and expired insurance affect the business short-term and long-term financial planning?
Okay, to answer that question, adjustment for unearned revenue help ensure we recognize revenue when it's earned, which is important for accurate cash flow forecasting. For expired insurance, we need to adjust to reflect the actual expense, ensuring we don't overstep profits in the short term and can plan accurately for the future.
Okay, thank you.
So, when discovering missed invoices or misplaced invoices, how should the company communicate this internally to avoid confusions or mistakes?
All right, thank you, Tan. It's a great question. So, effective communication is the key. When something like this happens, the department involved should notify the accounting immediately. Additionally, setting up automated system for invoicing and tracking can help to ensure that invoices are sent out timely and properly recorded.
Well, I want to ask again, does the oversight in interest revenue affect our tax liability, like considering it's a part of the income?
Yes, it does. Interest revenue affects net income, which in turn impact taxable income. Failing to record it means the business may pay more taxes than necessary because income was understated. Adjusting for it will ensure the correct taxable amount is reported.
Right. So, it's a great discussion, everyone. So, we have analyzed how each scenario impacts the financial account and highlighted ways to avoid similar issues. To summarize, accurate and timely adjustment are essential to maintain transparency and meet the accounting standards. Any final thought, everyone?
Yes, let's also emphasize the needs for internal controls and automations in our processes.
Yes, agreed. Like consistent reviews can prevent most of these errors from happening.
Well, of course, agree. Always keep on checking. Will always provide clear justification.
Thank you all for contributing. This was insightful and will help us improve accuracy in our financial process.
Okay, well, so let's discuss the part C. To support the growth of Masmera Enterprise, Tantari needs to adopt strategies to improve sales, credit management, account receivable collection, and inventory management. Let's start with credit terms. First, a short-term payment period can help minimize delayed payments and improve liquidity.
What about managing credit risk?
We should set credit limits based on customers' history and stability. This reduces excessive credit exposure.
Well, Tamil, can I ask, how do you handle late payments?
For that, clear collection procedures are important. We need to communicate payment terms and penalties and follow up on overdue accounts.
Right. So, Tamil, how do these credit terms impact sales and revenue?
For that, attractive credit terms like early payment discounts encourage customers to buy more and pay faster, which helps increase sales and cash flow.
I want to ask, what shipping terms can help improve sales and inventory management?
For that, we can offer free shipping for orders above a certain value, like RM 100 ringgit, to increase order size and sales.
So what about the inventory management?
Using just-in-time inventory helps reduce holding costs and ensures we only keep necessary stock, improving turnover and reducing waste.
So, Tamil, any shipping terms that help with the cash flow?
Yes, for that we can use FOB shipping point, means that buyer is responsible once the goods are shipped, allowing us to recognize the sale and improve cash flow faster.
So how do these changes impact sales and inventory?
Actually, free shipping increases sales by encouraging larger purchases. However, JIT inventory helps reduces excessive stock. And lastly, FOB shipping point speeds up revenue recognition.
Okay.
That's
So
all for the
guys,
part C done.
okay. So guys, I think we have reached to the conclusion at the end of our discussion. So I would like to thank you guys, for joining this discussion. Okay, thank you.
Okay.
Thank you,
Thank you.
guys.
Thank you.
Mm,
Thank you.
okay.